Aloha, YouTube investors. How is everybody doing today? My name is David Yansen. Welcome to my channel. Today is Sunday, November 8th, 2020, and it is earnings season, so I have been going through all of my holdings of my three main brokerage accounts. Fidelity is a dividend growth portfolio that I have, which has about $5,000 in it. My Roth IRA is with M1 Finance. That is sitting at about $7,700, somewhere around there. And then I have a growth portfolio with Robinhood, which is sitting at almost $3,000, so almost $16,000, or it might just be a little bit over $16,000 that I have invested for the last 16 months. I started last summer, 2019, and I started with Acorns and Stash, and then because of fees, I switched over to Robinhood, and then because of fractional shares, I switched over to M1 Finance. And so I originally had an individual account with M1 Finance, then I opened up a Roth IRA with them, and then September of this year, I moved my individual account from M1 Finance over to Fidelity. I have a video talking about why I decided to move my individual account over to Fidelity if you want to check that out. My playlists are all organized for you, so you can see the playlist and see how my portfolios have performed since I started tracking this in July of this year. Consolidated Edison is the company that did their earnings on Friday, so I'm doing their video today. The other holdings that I've done videos on already from my Roth IRA is, well, kind of just check the videos because I don't want to go through all of them. I have about 50 holdings, and most of them have reported their earnings already for this quarter. So, but you know, I've got anywhere from Procter & Gamble to Tesla to Fastly, Shopify, Uber, and Coca-Cola and AT&T. Those are just some of the videos that I have already out reporting their earnings. So far, I think the best one that has performed is Facebook's earnings as far as views that I have done so far. But check the playlist and feel free to share with your family and friends as well. So Consolidated Edison is based out of New York City. They were founded in the 1800s. They service about 3.5 million customers or so through New York City and Westchester County. Of course, they do gas and electricity, and they service retail, commercial, and residential government places. So the company I like because they are dividend aristocrats, and I believe it is 46 years that they have been increasing their dividend payment. So that is one thing that I really like about them, is that I know that I'm going to get that regular payment from them every single year. And it doesn't seem as of right now that that dividend is in too much trouble. I think it's actually relatively safe. I haven't looked, my subscription with Simply Safe Dividends has expired. I was on the free trial, so I don't remember off the top of my head how safe they said Consolidated Edison was. I'm pretty sure it was in the 80s or the 90s, because that's usually the companies that I try to focus towards. And the reason why I focus towards that direction is because I'm about to be 45. I just started saving for my retirement, so I feel that I need to invest in more stronger blue chip dividend paying companies. I do have growth in my Facebook account as well too that doesn't pay dividends, and I also own Tesla in my Fidelity account, and then I have some risky ones in my Robinhood portfolio as well too, just because I like to do the barbell approach to investing. So as far as dividend, again, with Consolidated Edison here, 76 cents per share. Ex-dividend date is November 17th. If I don't add to it, it's only because the price hasn't dropped that far, but I don't know that it will drop down below or even to the $72 that I originally got in at way back this summer. Dividend yield is actually really nice, almost 4% at 3.93%, and the payout ratio, according here to Fidelity, trailing 12 months is over 75% and a half. So annualized dividend, $3 and some change. So as far as their earnings are concerned for quarter three here, and my Chromebook is on the fritz, so I'm doing this on my cell phone. Last quarter earnings, this is according to Seeking Alpha. You can see announced November 5th. This was Friday last week. Actual earnings per share $1.48. That misses by 3 cents. Revenue actual $3.33 billion. Revenue surprise missed by over $73 million. So not great. My personal opinion is that with the way things are, paycheck protection loans and things like that, that some companies weren't going to be able to collect. So that's kind of my reasoning on why things haven't been great with Consolidated Edison, but they are a regulated utility, so you can expect that regular dividend payment from them. So, and I only own one other utility as of right now. I would like to add some more later on, and that is Next Era Energy. That's in my Roth IRA. So ending September 2020, revenue, as I mentioned, over $3 billion. That is down 0.95% year over year. And this is coming from Google Financials. Net income, almost $500 million at $493 million. That is actually up. So net income is up. Revenue is down a little bit, but net income is up over 4%. Diluted earnings per share, $1.47, up 3.5%. Net profit margin, up 5%. Operating income is barely up over 1.5%. So net change in cash is minus $1 billion, and cash on hand is $153 million. That is up 96%. So cost on revenue down 9.66. So this stock actually hasn't done very well over the last year. It is down 12%. But over the last 5 years, it is up almost 26% at 25.59%. And then year to date, the stock is down 14%. So utilities, typically you don't expect to get, unless something changes with maybe them acquiring another utility company or something like that, you don't usually expect huge capital gains from them. You usually expect utilities to give you solid dividend payments. And if they're regulated, there's a better chance of them growing that dividend, just because, state or city or wherever they're located at probably has set up some guidelines for them to abide by as far as earnings and acquisitions and things like that. So that is the earnings for Consolidated Edison. Stay tuned for other videos later on this week. I believe Lyft is reporting this week, and McDonald's is reporting next week. Or McDonald's actually is reporting tomorrow, I think. So I'll have video for you there. So have a great week, everybody. Mahalo and aloha.